sanctuary if you're ready tonight. I know that it's all so heavy. Won't you let me inside? 'Cause I could be your sanctuary.
What's up, guys? Hope everyone is doing well. In this video, I'm going to be going over some updates for Bitcoin, but to go ahead and get it started here, first off, here in this 2-day chart, as I've been mentioning a lot recently, I think approximately 20,000, and I think we could see some wicks down to perhaps as low as 18,000, but I think 19.5, 0.2, 0.7 thousand is more likely than seeing a very drastic one down to 18,000, but I think it's definitely possible, especially given how the in March crash, how that happened. I think that if we were to wick down to around 18,000, then there had to be some sort of bad news related information come out. But on top of that, I've had this channel drawn in here. I haven't shown before. It's from the local low back August of last year, halfway in August, absolute low of 15.4 thousand back in November of last year, up to the first time we hit 30,000 this year, around halfway into April. Then if we also draw in conclusion here, this 800 estimated moving average is dark blue and a purple one. You can see going all the way back to this high, this local high back here. We were rejected right off of that. This is very important that we gained back above it back here from around January until we did break back above it back in March of this year. So far we've been staying above it this entire time. We essentially bottomed out roughly with respect to it back here in June, halfway into June of this year. So if we lose that, it sits currently at 24.8 thousand, approximately 25,000 as I've been mentioning recently. According to the channel, we can see that this pink line was also very important going all the way back to March. We could also hit that around 23,000 or so approximately. Again, I've been mentioning 23,000 roughly, going down around 22.5 thousand per month at this point as a possible retracement if we were to actually break back below. If I find the box here, this pretty apparently important area of support that we were finding. It was obviously resistance back here. We broke it. So far it's acting as support. So if we end up losing that lowest at around 22.5 thousand, like I said, 20,000 I think would be most likely next. And I think all of this would happen out or occur before the end of November at the very latest. But if we go to this weekly chart right here, we can see, so I've gone over in the past, I went over this type of analysis on macro on the falling wedge we've been in since 64,000, but we can see up here, with the red dotted line, we have a descending resistance of this most recent downtrend we've been seeing. Going all the way back to around March of this year, we see this support, this descending support, and then we have this horizontal support, which was resistance back here, so I went over it with this blue box right here. Also, again, we can see all of these types of supports or resistances is all finding confluence at basically really at around 22.5 to around 23.5 thousand when you take into effect the horizontal where it lies. But like I said, I mean, even this descending support that we have right here goes all the way down to around 20,000 into around halfway November. Again, meeting this box right here where we could possibly see some wicks down to 19, even 18,000, like I said. But when it comes to these three patterns right here, depending upon how long it's going to take, like for example, at longest, let's look something like the blue, medium turn yellow. Let's say we've already met our lows, which I'm going to make a case for that here soon. Then we would see something like this green path leading up to, like I've been saying, I think 180,000, 240,000 approximately, 45,000 approximately, is most likely where Bitcoin will top out leading into the next bull market. Like I was going over here on this 2-day chart, again with this 800 estimated moving average right here playing out as it has. When we go to the weekly chart, we see that the 200 estimated moving average has basically been doing the same thing. It wasn't quite as much of a resistance back here for this top in August of last year. It was clearly resistance right here. We've broken above it and has been used, this 200 estimated moving average has been used more as support than the 800 EMA on the 2-day chart. And this being the weekly chart also is just more valid in the sense of actual technical analysis. We're also getting, if I go back to this chart, I didn't show it, we're getting bullish, or my bad, we're getting hidden bullish divergences after seeing bearish divergence going down to around the daily to 2 daily at the lowest. But the main thing with respect to the RSI here is the fact that we If I zoom in here, we can see that we printed a pink vector candle right here recently with the most recent low, this drop we've seen. But we didn't get it back here in November when we hit around 50.4 thousand. And so basically, I mean, we can see down here that the RSI with this most recent drop is lower than it was at 50.4 thousand and also lower than it was when it hit 17.5 thousand. That, again, just to point it out, encompassing this type of double bottom that we've seen right here, where we see like an M as basically the bottom range of it leading into the final double bottom, where we then actually see some sort of a reversal and trend. So I find this insanely interesting. It leads me to believe, again, going back to this chart, we can see even on the weekly, the hidden bullish divergence after the bearish divergence acting as a continuation. If you go back and analyze a number of charts, you'll see that when you have multiple, like let's say you have just multiple bearish divergences printed, typically hidden bullish divergences will be printed within those subsequent bearish divergences to continue the uptrend, even though it's printing bearish divergences. But all in all, I basically think this is leaning more towards that we'll bottom out basically where we are. We'll follow through with this hidden bullish divergence on here. We'll bottom out again with respect to 200 EMA on the weekly, the 800 EMA roughly on the 2-day, and then see something more like the green path. But again, at the end of the day, I don't know what is going to happen. Nobody knows what's going to happen. And we could either extend this as long into November down to the worst possible price target, which still remains as bullish support, or we could, see something kind of in between all of that. Lastly, this monthly chart on here, what I did was obviously I went back to all of these lows because they all find commonality, and when you can see we clearly meet this turquoise, this blue moving average, the 50 EMA right here, 2014, 2015, 2018, 2019, and then currently we did blow it the most that we have in Bitcoin's history, just because Bitcoin's starting to lose a little bit of its strength now. It's a lot more mature than it was back here in 2018, 2019, 2014, and 15. So finding similarity between these, also we can see this time confluence right here. Basically, I place these vertical lines at the midpoint of the actual bear market when it actually ranged within the lows, which is what is encircled. We can see that this time period of 44 bars has been pretty apparent throughout the entire history. Even if I go all the way back to this one and I do the same thing here, we can see that it lines up going all the way back to October 2011, slightly before we set the actual low and began to really go up, but a little bit after the bear markets actually began. You can see it's the same thing happening basically each and every single time. And on top of that, the price only ever needed to interact with this 50 EMA in its band once, and then from that point onward, it began the actual bull market. We had this point in March of 2020, like I've been mentioning, where we did drop very significantly, but nonetheless, we didn't set any new lows. And then right back here in 2014, 2015 is very, very obvious what happened there. And on top of that, we are coming down. You can see that we've been holding. If I zoom in here, you can see each of these wicks have basically come down to this 50 EMA, going all the way back to June of this year. So again, factoring that in with the weekly and the daily analysis that I went over, right now I'm personally leaning to, at the very lowest, if I go back actually to the 2-day, the very lowest we'll have to not on the daily, 2 daily, etc., close below around 24.7 thousand. If we start to close below that, I would be led to believe that this hidden bullish divergence continuation is basically being invalidated, and we're going to go lower here, whether 22 to 23,000 or even as low as 20,000 as late as November. And then again, just to reiterate it, if we break 33,000, I think that's kind of like the final line in the sand. And if we break this area right here, start to close below it, I mentioned we could wick below this red line on other charts, but if we start to close and subsequently open below around 19.5 thousand approximately, I'd be led to believe we're likely going to go lower than 15.4 thousand, but personally, as my own bias, I don't think that's what is most likely at all things considered. But that was all that I wanted to go over in this video, so hopefully you enjoyed. Again, none of this was financial advice. By all means, do not make any decisions upon what I think about the market. Come to your own conclusions through your own decisions and your researches. But hopefully you enjoyed, and I hope you all have a blessed day.
Now won't I see you forever start to